Welcome to the Be Smart podcast, how not to be an idiot with your money. Jared, how you doing today? I saw you were struggling with the daylight saving time change. I am as well.
Yeah, the fall back, it doesn't bother me, but the spring forward, so I got to go into the radio station like every other Tuesday, which means I got to set my alarm for like 5:15, which is early for me. And now it's like 4:15 with the time change. Like it's going to suck.
Yeah, I'm having a tough time like just falling asleep now. It's pure insomnia. Yeah. It's not fun. Hopefully I adjust soon. How was the birthday?
Birthday was good. It was really good. I should have brought the book in here. So the present was a signed copy of Barry Hanna's Airships from my wife.
Unbelievable.
There's a date on the signature. It's Christmas of 1980.
I noticed that when you sent it to me. That's really cool. Yeah, he dated mine as well. Obviously, it wasn't as cool as Christmas, but that's pretty sweet.
Yeah.
I'll throw up a picture of it when we edit this.
I got it on a little book stand in my library. Like it's the first thing you see when you walk up the stairs. And I don't really see myself being like a rare book collector or anything like that. But of all signed books to have, that's
the one.
That's the one. Yeah.
Did you just weep tears of joy when you got that?
I did. Yeah.
Yeah. I mean, how could you not? All right, enough banter. You want to get into the market headlines?
Sure.
First one, Mark Carney wins race to succeed Trudeau as Canada's prime minister. So Carney had this to say in his victory speech on Sunday. "We didn't ask for this fight, but Canadians are always ready when someone else drops the gloves. So Americans should make no mistake. In trade, as in hockey, Canada will win." I mean, we're busting out hockey references. That's how you know it's serious.
That obviously plays very well in Canada, the rah-rah stuff. I got to tell you, my biggest Canadian client canceled a couple days ago.
They're pissed.
I have basically 3 big subscribers, like firms in Canada, and the biggest one canceled. And I didn't get a reason, whatever. I mean, partially it could be some of the stuff I was writing in the newsletter because I've been very pro Pierre and, all this stuff, and who knows. But I mean, Canadians are cutting ties with U.S. firms.
Well, how much messier do you see this trade war between the U.S. and Canada getting? I mean, like we were saying, they're rightfully pretty pissed off since Trump took office.
Honestly, I don't see it getting much worse. I think in a year it's going to blow over. I really do. I think Trump, he's trying to get border protections. He's trying to get rid of tariffs on us. I think if he gets what he wants, I mean, I don't really see this as like a persistent source of revenue. I really think he's just trying to get his way on this stuff.
For our next headline, the bond market's Trump trade is looking like a recession play. Traders have been piling into short-dated treasuries, pulling the 2-year yield down sharply since mid-February on expectations of interest rate cuts as soon as June to keep the economy from deteriorating. Let's start with the big R word. Trump said the U.S. economy faces a period of transition, deflecting concerns about the risks of a slowdown. Are you in this recession is imminent camp? And if so, what are the key factors that could be tipping us in that direction?
I don't know about a recession. I do think we're going to get a slowdown. And one of the key factors is Doge for sure. We're going to be laying off hundreds of thousands of people. And as a consequence of that, there are going to be government contractors that are going to be laying off hundreds of thousands of people. So there's going to be some pain there. And also Scott Bessent was on CNBC this morning saying that, what was he saying? He was saying that the economy needed to detox, right? So you have Trump saying there's going to be this transition period and Bessent saying that the economy needs to detox. I mean, basically what this means is Trump is front loading all the economic pain in the first part of his term, right? Which I think from a political standpoint is really smart. You don't want a recession right before the election. You actually want to engineer one at the beginning of your term, so you're coming out of it for the next election. So I think there's some politics involved here. A lot of this is the tariffs, but and a lot of this is real late cycle stuff. At the end of Biden's term, I'm also going to go back and say Biden was good for stocks, bad for bonds, and good for the dollar. Trump is bad for stocks, good for bonds, and bad for the dollar. It is. I said that in the Jared Dillian letter like 4 months ago. It is playing out exactly as it is supposed to.
Speaking of stocks, have you seen the Mag 7 sell off today?
Oh, yeah.
I mean, Tesla is getting shit house. It is down now 14%. Microsoft's down about 3.6, Nvidia 5.3, Apple down 5.6. It's looking rough out there. A lot of red on the screen.
I think you're pretty close to a buy on Tesla, actually, which is not financial advice. I'm not giving financial advice, but I've traded Tesla a couple times. I'm pretty good at picking bottoms. The stock was at 480 a couple of months ago. Now it's at 230. It's been cut in half. Like, I think now is a time to dip a toe into Tesla for sure. And I'm actually sorry I didn't buy Tesla before the election because I had a hunch Trump was going to win. And you knew Elon was going to benefit from that. And now the narrative is he's so busy with Doge, he doesn't have time to run Tesla. Like, I would buy Tesla at 230. I like that trade.
So with so much angst and uncertainty in the markets, how should the everyday investor kind of position themselves? Is this more so where an environment that's better suited for like a more of a hands-off approach with something like the Awesome portfolio, or with a slowdown and possibly a recession, are the opportunities too good to pass up for those looking to capitalize?
There are some really good opportunities. I think if you could go in a time machine and go back 3 months ago, you would sell all your index funds and Mag 7 stuff and you would buy Europe, right? Like, that's what you would have done 3 months ago. And that's what I was doing, Now it's kind of a little bit too late to be doing that. The Awesome portfolio or the strategic portfolio, which is a variant of that. The strategic portfolio has been doing fantastic this year, like absolutely fantastic. In terms of like what you get for a low volatility portfolio, I want to say it's up like 4 or 5% or something like that year to date. And this is a portfolio with like really boring stuff in it. So, yeah, that always works.
Our last headline, we don't talk about oil a lot, but this headline from Bloomberg: oil falls as China data deepens gloom and risk off takes hold. So crude has been hit by a confluence of bearish factors, including the escalating global trade war, plans by OPEC Plus to increase production, and talks to end the 3-year war in Ukraine. Do you think oil is bottoming here, or do you anticipate more downside?
I am totally conflicted on oil. I am totally conflicted. Technically, I kind of like the chart. I kind of think it's bottoming here. Fundamentally, I hate it. If we are really going into a slowdown or a recession, oil should go lower. Although, you have to figure some of it's already priced in. But I'm very conflicted on oil. Now, I have a position in XLE, right? Like XLE calls, which are like long dated calls, and I'm happy to wait this out. I'm more of a technical guy, so I tend to trust the charts, and I do believe that oil is kind of bottoming here, but it's a tough one.
For our main topic, and I know you've discussed this on a couple podcasts recently, but I want to bring it over to our channel: tariffs as a deflationary force. Can you dispel this common assumption that tariffs are inflationary? So why are they actually a deflationary force?
Yeah, I started thinking about this. Like, I used to think that tariffs were inflationary, right? Because if you have tariffs on bologna, then bologna costs 20% more, and people are paying 20% more for bologna. So they're spending 20% more, and you have inflation, right? So that's kind of the linear first order thinking. The more I thought about it, I'm like cars. Cars are a big thing. There are car parts that cross the border between Canada and Mexico several times before, like in the building of a car. So the tariffs are being applied multiple times. And in the course of building a car, you might have $10,000 or $20,000 in tariffs, right? So if a new car costs $46,000 and you go to buy a car and it's $60,000, you're not going to buy the car. Like, you're just going to be like, I can't do it, or you're going to buy like a fully American made car, like made in the US, that's cheaper, right? But you're not going to buy a new car. So if you don't buy a car, then economic activity slows down, right? So all the vendors and manufacturers that make stuff that go into a car, they slow down. It's all very deflationary. It slows the economy down. And I think that's being priced in the bond market. I think it's being priced in the dollar. And it's just classic market stuff because like whenever you have consensus on something, it always turns out to be wrong. Like if it's like, oh, the tariffs are inflationary. Well, that's turning out to be wrong. So I actually think not only I think they're deflationary, I think they're mega deflationary. I think they're really deflationary. And you're seeing inflation come down. Trueflation is at 1.3%. I think the CPI is this week or next week. I can't remember.
Yeah, it's this week.
Yeah, like I would not be surprised if you see a big miss on CPI.
Interesting. Very interesting. Yeah, you've swayed my opinion on that because I was definitely in that consensus. Tariffs are just going to be inflationary. It's going to skyrocket, but it makes sense that demand would go down and people would be buying less.
Yeah.
We have a question in the mailbag from one of our subscribers. He wants to know, do you think the U.S. Treasury could reprice U.S. gold reserves?
Essent has said that he's not going to do that. So I actually thought that was a possibility. I thought it was something that was on his radar. It's not on his radar at all. He said he has no interest in doing that.
And now for the week ahead, inflation is in focus with fresh readings on PPI and CPI. CPI is on Wednesday, PPI Thursday, and then we've got the University of Michigan consumer sentiment on Friday. Where do you stand on any of these topics?
The inflation numbers are going to be pretty big. As you said earlier, the front end of the yield curve has run up a lot. Twos are at 3.9%, with Fed funds at 4.5%. So we're pricing in some rate cuts. I think there's actually room to price in more rate cuts. I'm in the camp that we are going to have many more rate cuts this year. And I mean, just judging from the stock market today, like the Fed is watching what's going on. Like I'm pretty bullish on bonds here. Let's put it that way.
You said 6 potential rate cuts last week. Do you still think that's a possibility?
Yeah, I think so. Yeah. And maybe not 6.25s, but maybe a couple of 50s and some pauses. But I think you'll ultimately get 150 basis points of rate cuts this year, which will take you down to 3%. I think that's what's going to happen.
Kind of a short podcast this week. You got anything else off markets you want to discuss?
So I have a DJ gig in Nashville on July 17th. It's a long way from now. It's 4.5 months. I'm really excited about it because it's at this incredible club in Nashville. It's a new club. It's called Night We Met, and it's got a great sound system. It's very swanky, very stylish. It's in a great part of town. It's in the Gulch. Like it is very cool. So I'm just trying to get 100 people to show up to this thing, right? If I get 100 people to show up, I'm going to be super happy. So it's I'm already super excited about it.
Mike and I were talking about hitting that.
Mike who? Oh, Mike King. Yeah. Oh, you guys should. Yeah.
If we can swing it. I think Mike is like pretty locked in. I think he'll be there. Shout out, Mike. Okay, that wraps it up this week. Jared, thanks for your time. Everyone, please like and subscribe to the podcast. It helps us a ton. Jared, I'll talk to you here soon. Later.
See ya.